All right. So, good morning and thank you everyone for joining us today. I'm very excited to have everyone at today's webinar, and this will be an opportunity for us to learn from each other. So, today we're going to discuss about the applications that we have called forensic accounting technology to detect financial statement fraud risk. So we all are aware that in recent year, particularly post COVID, financial statement fraud incidents show inclined patterns where the increase of the number of fraud incidents as well, we look at the damage as well, that caused to the company is quite significant. If you're working in the banking and finance industries, particularly in Indonesia, you must have heard that the NPL has significantly increased, and that part of that is due to financial statement fraud happens in a lot of banking industry. So I think it is important for companies, particularly the board of directors, the commissioners, investors, as well as the corporate credit risk at bankings, etc., to understand this type of fraud risk and how to mitigate this fraud risk by leveraging technology. So a bit of introduction. My name is Eman Marpaung, and I'm currently the forensic accounting and financial crime partner at Triage. So prior to work at Triage, I work at PwC Indonesia and BDO Australia in Sydney office and some other big four accounting firms. Next, so before we started this webinar, so we would like to show a video about the applications, and let's have a look at that.
In the world of finance, where facts can be elusive and the numbers are often obscured by complexity, many corporations misrepresent or deceive investors into believing that they are more profitable than they actually are. This is called financial statement fraud. Financial statement fraud stands as the costliest category compared to corruption and asset misappropriation in the last 20 years. In Asia-Pacific region, the median loss due to financial statement fraud has increased 329% from 2018 to 2020. The fraud lurks in the shadows of balance sheets and income statements, deceiving stakeholders and distorting the truth. Forensic accountants are the frontline detectives armed with analytical precision and relentless scrutiny to uncover hidden schemes and restore clarity and integrity to financial reporting. Forensic accountants play a crucial role in uncovering hidden schemes and keeping financial reporting integrity. However, there are limitations regarding these forensic services, as often it takes a long time to complete, requires significant fees, disturbs business processes, and often results in a lack of findings, amongst other reasons. At Triage, we use a forensic accounting technology, or FAT, application, a patented application owned by Triage to identify financial statement fraud risks. The FAT application serves two main purposes. First, to identify whether a financial statement poses a high risk of financial statement fraud, and second, to identify which accounts in the financial statement pose a high risk of manipulation. With only 5 years of financial statements, the tool is able to provide the information required to the users regarding the financial statement risks in just hours. The FAT can be used in various industries such as banks, stock exchanges, for large companies with many subsidiaries, venture capital and investors, M&A and accounting firms, shareholders and audit committees, internal audits, and others that rely on financial reports in their decision-making. By leveraging our tools effectively, organizations can make fast decisions while also ensuring the integrity of their decisions.
All right. So please be informed that we will provide free testing for 10 companies. So we would like to use the applications for testing your financial statements. We can do that. So for the listed companies, we definitely can get the financial statement from the IDX. For non-listed company, we can have an NDA. So we will select 10 of them and contact you. So feel free to fill the forms that will be shared during the webinar. So all right, let's start it. So I would like to start it with presenting a survey from the ACFE, which is the Association of Certified Fraud Examiner. So based on the surveys, which is the ACFE report to the nations, the financial statement fraud has been always the costliest fraud category compared to corruption and asset misappropriation in the last 20 years. As we can see from the table, in 2004 to 2024, the financial statement fraud is crazily, significantly become the costliest fraud category in terms of median loss. And in Asia Pacific itself, the median loss due to financial statement fraud has increased significance as well, from 700K in US dollars in 2018 to 3 million US dollars in 2020, or 329%. And this is, please bear in mind that this is before COVID hit, and which is after COVID, it significantly increased as well. I would like to share this case where HP purchased a company based in the UK called Autonomy. So HP purchased this company in 2011. It was at the price of 11 billion. However, about a year after they purchased this company, they identified that this guy, his name is Mike Lynch, he has inflated the revenue of the business, and at the end, he filed lawsuits against him for 5 billion US dollars, which is almost a half of the price. Can be prevented. So if this can be prevented if they were to engage a forensic accounting. But as the video says, like the forensic accounting investigation has some drawbacks. So from time wise, it takes a long time to complete. The fee is quite expensive. Sometimes there's no findings, disrupting, limited scope, and other things. So to answer these limitations, next, we'll see that this is where the forensic accounting technology comes to play. It serves two main purposes. So the first one is to identify whether a financial statement poses high risk of financial statement fraud. The second one is to identify which accounts in the financial statements that pose high risk of manipulation. How does it work? It starts with the financial statements. We only need 5 financial statements. The minimum is 2 financial statements. And then we do mapping and data entry to these applications, and then processing time, database, and reports. So we can complete this within hours. So at the maximum is 1 or 2 days. Next slide. So this is for illustration only, how it looks like from the application perspective. In the application, we have there a balance sheet, income statement, and cash flow. So we fill that information, and then once we submit it, next, we will see this is the model score results. The model score will have a lot of index and ratios using in these applications. So if you can see, there's a lot of reds: high risk, medium risk, and low risk. So we have 2 types of model score at the very bottom, type 1 and type 2. It's actually the bullet weapons for us to detect financial statement fraud. There are some cases, like Wirecard cases, they model score type 1 could not detect, but type 2 could detect. The reason for that I can explain is there are some people who understand forensic accounting and sort of able to play around with it. Next slide. So this is the report that coming from the applications. In the applications, it's very straightforward. So the first part is actually the summary. So for instance, financial statement 2000 indicates high risk of financial statement fraud. Further assessments is recommended. And then down below, those are accounts that are identified as high risk or medium risk. Next slide. So this is the dashboard. So not only the reports, we also provide the dashboard to the company to have making sure they have sort of understanding from the movements of the graphs if they were to identify suspicious movements, why certain account is moving but the other one is not moving while they're supposed to move in parallel. Right. So we have tested this application for quite a lot of financial statement fraud cases, as well as financial statement from good companies. Just to mention, like Enron, WorldCom, Tyco, Satyam, Tiga Pilar, Wirecard, Garuda, Bukalapak, and other things. So we tested the applications and we identified the exact same account that was identified by the fraud investigator or the forensic investigator. Just one example. Next slide, we will see one example of this is Tiga Pilar cases. I'm sure everyone may have read that it's already in the public. So as we tested these applications, we see there's quite a lot of red flags and medium risk that identify using these applications. And I put their notes there. So those index DSI, DRI, and then some other things that indexes there. It's a bit small. Sorry about that. So it relevant to each account, which is those accounts, account receivables, and sales, revenues, and some other things. So if you look at the news, it says there. I'll read the news. Ernst & Young found some differences between the internal data and financial record used by the auditors. It explains that there are allegedly 4 trillion rupees or 283 million US dollars overstatements on account of receivable, inventory, and fixed assets in TPG groups. Moreover, there are 662 billion sales and 329 billion rupees EBITDA overstatements on the subsidiaries. And those are, if you see that, it correlates with the accounts that are identified by the applications. Further, it says the audit also found 1.78 trillion rupees fund flow through several schemes such as bank loan and time deposit withdrawal and so on. So that's on the last one in the very bottom is a debt. So it's related to that account. Next, we're going to look at the other example, which is Garuda. I'm sure everyone may have heard this news that if we look at this Garuda cases, there's only 2 items or 2 accounts that are identified as medium risk and high risk. And those accounts are account receivable and sales. And if you look at the news from Reuters, I'll read it. While regulators did not disclose details of the errors, Garuda's executives confirmed on Sunday that they were related to a misrepresentation of 240 million American dollars in revenue that is yet to be received from PT Mahatta Areo Technology. So that's sort of an example that we try to look at using the application to identify manipulation in the financial statements. Next, we're going to look at some other example from, in this regard, we'll look at it from Bank Central Asia, which is a listed company. So when we tested this application, the financial statements, bank BCA financial statement using this application, we see, as you can see now, it turns out it's green. And there are some medium risk there, but as we check it, the model score is very close to low risk. So this is pretty much, it's a good company if everyone would like to invest. It's a good company. We did not identify any significant fraud risk in this financial statements. Next. This is Unilever Indonesia. We also identify, if you look at the motor score type 1 and type 2, we don't identify any high risk. There's a few of medium risk and very few like 2 high risk. But as we look at that, the medium risk is closer to low risk and the high risk is only those 2. And next, we're going to look at some other companies. And I have to hide the name of the company because I think it's confidential. Just want to share to everyone that using these applications, we can test that this particular company is a listed company where we can get the financial statement from the IDX, and we see a lot of high risk coming from these companies' financial statements. The other sample that we have as well, we also hide the company name. Again, we think that is it maybe not appropriate to show the company's name, but again, it's a listed it's a listed company. We got the financial statement from the IDX, and we identify significant high risk in 2021, 2022, and 2023. So again, having this application is help us to identify manipulation risk of financial statement risk in the financial statements that we are going to make decision or rely on. So next is who needs the application. So there's quite a few industries and companies that can use the application. So the first one is bankings. So banking can use this application to perform assessment before they lend the loans. So as I mentioned earlier in the front, in beginning, that a lot of NPL in recent years, like in the last, particularly this 2023 and 2024. So the NPL has increased significantly. So again, part of that due to the risk of financial statement fraud that damage to the company. So the banking can use these applications before when they looking the financial statement of their potential customer or even the existing customers to making sure that the NPL to mitigate the NPL pretty much. The second one is venture capitals, so they can use this application to perform assessment before they made investments. OJK stock exchanges. So in Indonesia, the OJK has the function to monitor the listed company, making sure, and part of the OJK responsibility is passed to the IDX. And so Indonesian Stock Exchange, they can use this application to perform annual financial statement monitoring on the listed companies. So whenever they identified high risk on certain companies, they may want to send questions, send the letters or questions, or even do audit to them. And then further, the Indonesian Stock Exchange or the IDX can also look at the accounting firm. So which accounting firms that relates to, and that could also connected or related to this backlisting or delisting that KAP from the Indonesian Stock Exchange list KAP. Not only for that, further the Indonesian Stock Exchange can also use it for the IPO before they admit it as a listed company. Down below, there's also accounting firm that can use the application for audit and assurance, as well as advisory firm for M&A. As we previously looked at the case where HP and Autonomy, which is M&A cases. So we do not want to have purchase a company, our client purchase a company, but then about a year after, then they identify fraud. Just to share a bit, when I was in Australia, we have a lot of clients. I have quite a lot of clients where the project was engaged, was related to after M&A. So what the clients did is after they purchased a company, and then they thought to, why is the company doesn't making money as projected by the financial due diligence team? And they often realize it during the period 1 to 2 years. So during that period, 1 to 2 years, they're questioning and they went to us. And as we conducted the investigation, we identified a lot of fictitious revenues. So it's very common for in M&A whenever we like in just in daily activities. So if you have a house and the house is full of cracks, and then if you want to sell the house, you want to making sure that the house is all of the cracks are patched. And that's exactly what companies do. Whenever they want to sell it, they know that they're going to sell it, so they want to making sure that the company looks great. Some funds or investors, they definitely can use this Indonesian INA. They can use that for the assessment for investing, particularly in the sovereign wealth funds. They're using the public funds, so they want to making sure that whenever they want to invest in certain companies or stock or whatever it is, they don't want to risk of getting financial statement fraud that could damage the investments. Down below, shareholders and audit committee. So the shareholders can use this application as well to perform annual financial statement monitoring on the subsidiaries. So for large corporation in Indonesia, they have 10, 20 or more subsidiaries. They can use these applications to check which subsidiaries that committed financial statement fraud. And for corporations, internal audits, they can also use this for third-party due diligence. So for a large company like Microsoft Office in the in the US, so they use similar applications to check on their customer due diligence because they don't want to have customers, but that could not pay their receivables. So they perform customer due diligence and vendor due diligence using the similar applications. The last one, but not least, is insurance company. They can use this application for their assessment before issuing a letter of guarantee. Next slide. So what the client can and should do when they found red flags. So for bankings, particularly for bankings, they can request further data or informations or conduct additional assessment before they lend loans. For normal companies, they can inform and ask the auditors to have thorough checks on those identified account that has identified as a high risk, or they can perform internal review on their own, done by the internal auditors, or they can request a credible third party to perform forensic investigations or forensic accounting investigations. Next. All right. So I think I am on the end of my presentations. So if there's any questions from the participants, we only have, as mentioned in the invitation, we only have 30 minutes for this presentation. So we can take 3 questions from the participants. So please, if you would like to ask something, please unmute yourself. And again, Bapak Ibu bisa menggunakan bahasa Indonesia atau bahasa Inggris juga, so it doesn't have to be in English.